The broadcast is now starting. All attendees are in listen-only mode.
Hello, everyone, and welcome to August. I cannot believe it. I don't know. This year has been cuckoo crazy and it's been going by very quickly. I cannot believe we're in August. I hope everyone has been staying safe and staying sane in these crazy COVID times. Not to mention for anyone out on the East Coast with that tropical storm. I've had a few colleagues who have been out of power for a couple of days. So if you happen to be in that part of the country, I hope you're staying safe there as well. All right, so today's session, basics of knockouts and binary options. We are going to cover knockouts and binary options, and we are definitely going to be getting into the new Nadex platform. And I am hoping to spend a little bit more time today with some of the technical analysis tools that we've got on our charting platform. Just to sort of tee up what we got, and I probably am going to focus on gold today. It has been a very popular product, and there's all sorts of economic reasons why gold has become a real flight to safety, and we've been seeing that market pretty busy, and gold setting all-time highs for the price per ounce. So I think I'll use that as my example today. Before we get into today's session and we really dive in, I do have to bring up our disclaimer slide. This is important. So please don't take it lightly, but trading does involve risk, whether it's at Nadex or any place. All trading decisions you make are your responsibility and are at your own risk. And then this is actually probably the one point I really want to drive home. I am going to be doing this session today for your educational purposes only. Please do not construe anything I say as a buy or sell recommendation. Strictly educational. That's an important note. So as long as we're clear there, this is the agenda. I am going to go through knockouts first and then binary options. And in there, I will be navigating around the platform. And as I mentioned, I am going to try to spend a little bit of time on our charting package and show you some of the new functionality that we've got there. One thing I definitely want to drive home is this can be an interactive session. I've got my colleague Sophie in the background. You've got a little questions box. And I would recommend that you type in your questions as we go. It can be on what I'm covering. It could be about Nadex platform, Nadex markets. It could be an account question that you've got questions about. Sophie is an expert. Please engage with her. In fact, type her a message that you'll definitely send her a question. Wake her up. She gets a little notice when you guys type in there. So please, I hope that you can engage with Sophie, keep her busy, and make sure that you're keeping me honest and that I'm not going through things too quickly or missing anything. And I will try to go back and review the questions at the end to make sure that I didn't have any glaring omissions. So please use that question function. All right, I am now going to go ahead and jump over to our website. And, I mentioned I've got Sophie here helping you, so please engage her. But if you need to contact Nadex, I do like to point this out. One, there is a contact page, and you can figure out how to reach Nadex. Because I did that, I'm going to have to do this. Let's go back. The other thing I want to mention is we do have this chat functionality, and we even have this in the platform. I'll point that out as well. So, and I'm just going to bring that up, and when you can type in, and please reach out to us if you have got any questions. We are here to help you. The only way we're going to be more successful is if you're successful. So please, if you need some help, reach out to us. The other thing I like to point out is if you'd want to know what's coming up on our upcoming webinars, I'm going to click on that little webinar section. This is the session we're doing today. We do record everything. We make it available in our on-demand archive. It's also on our YouTube channel. I would recommend you go to YouTube and look up Nadex and subscribe to that channel so that whenever there's new content that we put out there, that you'll, you'll have an opportunity to go review that at your leisure. All right, I am now going to go ahead and log on to the platform. Let's get into the meat of it. I'm going to log into our demo environment because I might place some demo trades. Again, nothing is a buy, sell recommendation. Need to emphasize that. But let's go ahead and if you don't have a demo account, I would recommend that you get one. Notice in the upper left-hand corner, it says demo. If I were in a live environment, it would say live. The prices you see, for the most part, are the live prices, but it is a demo environment, so it's not perfect. Your experience in a demo environment will be distinctly different than a live environment. In a live environment, you've got a lot of people looking at those markets. And in a demo environment, it's just people in demo. So don't expect to have the same trading experience, but it is a great way for you to become familiar with the platform, how to use it, and even practice a little bit. Okay, and again, I want to encourage you as I go, please type questions in. And if someone out there could just say, hey, Sophie, that would be appreciated, just so I know that we're keeping her awake. So when you log into the Nadex platform, you'll notice that there are different panels. On the left-hand side of the platform, there are our market classes. All right, you've got binary options, call spreads, and knockouts. And underneath each one of those, we've got the different products. The market classes that are available, we don't have, for instance, you'll notice we don't have events in call spreads. Doesn't make any sense to have events in call spreads. If you're not familiar with our events contracts, they're all binary contracts. Then you'll also notice there's a positions panel at the bottom and your workspace in the center. Let's get into knockouts. That's where we're going to start, and I want to show you what a knockout, define them, show you how to research them. I'm going to show you how to do some little analysis around them and even how to trade knockouts. And then I'll explain that quickly in call spreads, and we'll go to binary options in the end. And there you'll see the variances and the differences between the different products, and you can make a determination which one's right for you. In knockouts, there are indices, foreign exchange pairs, and commodities. I am going to focus today, just because I mentioned it, on gold. It's just a hot product, so I'm going to use that as my example today. But we've got knockouts for both crude oil and gold commodities. When I click on this little arrow and I can see that there are 4, there will always be 4 knockouts. Okay, and knockouts are always weekly in nature. I am going to pick any one of these because it doesn't really matter at this moment in time which one I click on. But when I click on one, it's going to populate a chart and bring up an order ticket. I am now going to click on this market section, clear that out of the way, and I'm even going to clear these positions out. Let's give ourselves a nice big chart. Let's look at a 1-week chart. That's great. Let's look at a 10-minute chart. Okay, I'm going to give us a little bit. Wow, look what gold has done over the last week. Okay, gold's been on a rampage, and if you're curious why gold's been doing this, it has been a flight to quality. Governments around the world printing more money, people sitting on cash, not getting any interest on their cash, so they're looking to put it into some type of asset that they feel might hold value going forward as currencies get devalued. And so you see people pushing money into riskier assets, going into the equities, the stock market, going into different commodities, gold definitely being one of those, benefiting from where people are allocating their money and their wealth. All right, gold's clearly been in an uptrend. Now, let's talk about these knockouts. Notice on the left-hand side of the platform, there are 4 blue lines. If I click on any one of them, it will adjust on the chart, and you'll notice as I move them around how it adjusts on the chart. Now, what is a knockout? A knockout really is a defined risk, defined reward trading opportunity where you are trading what is called a Delta One product. It trades right with the price of the underlying. So I am going to just click on this one here. And when I click on it, uh, let's go ahead and click on a buy just to get the order ticket up there. You'll notice on the order ticket, it's got an indicative price of where gold is currently per ounce, 2068, almost two, yeah, there it is, 2069, right on the button. It's also, that indicative price is down here on your chart. It tells you when this contract expires. So this contract expires in a day. They're always weekly contracts. But if it's something you wanted to stay in, once this settles, you can always go into the next week's knockout. Now, what are you trading when you trade a knockout? You are trading the underlying asset, which is the gold futures contract. All right, that is exactly what it is pricing around. And you'll notice that there's a bid-ask spread that is going to be pretty much right around the indicative price. So you are trading the price of gold. If I thought gold were going higher, I could click on buy. If I thought gold were going lower, I could click sell. Right now, what are the boundaries of my knockout? What am I looking at? And I'm just going to go with the trend. They say the trend is your friend. Let's just say I think gold is going to continue going higher and I want to buy. If I bought right here at, let's make it a nice round, 2070 50. All right, let's just go ahead and make it 2070 50. I'm going to go ahead. There we go. If I were to buy at 2070 50, all right, that's what I'm, potentially looking to do here. If I bought at 2070 50 and I want gold to go higher, if I were wrong, let's just say I were wrong and gold were to go lower, I've got a stop loss down at 2051. That's essentially what the lower boundary of a knockout does, is it protects me in the event that I'm wrong. If gold were to trade down and touch 2051, I would get knocked out of this trade. All right, I bought it, it went down, and I got knocked out. That is essentially my stop loss. Okay, and I know before I get into the trade what the most I could potentially lose. I cannot lose more. If I buy one of these, I cannot lose more than $195. Now, if I wanted to have a tighter stop loss, I could simply choose a different knockout. I could choose the one that's up one level, and notice how it moved me up $10. So now my floor isn't 2051, my floor is 2061. And if I were to, well, here it's now $1 higher. If I were to buy one at 2071.50, all right, it's gone up $1 while we were sitting here, the most I could lose would be $105. In fact, let's go ahead and place that order. I'm going to try to buy one at 2071.50. Actually, let's just make it 2072. This thing just keeps going up. And you can certainly do this. All right, I can 2072. I'm going to place an order, and it says I placed my order, and you'll notice down here that I've got a bid 2072. Is it? Now remember, this is a demo environment, not a buy-sell recommendation. Purely, for educational purposes. But I placed an order, and we've got an order right here, 2072. We're trying to buy one. If I buy one, I know that I cannot lose more than $110 if it were to, and looks like I bought it. All right, so you can now see that it went from my orders to my position. So I bought one. Okay, fun. I know I cannot lose more than $110. All right, if gold were to turn around and touch 2061, I would get knocked out of this trade. That would be it. It would settle. I would experience a $110 loss, but I couldn't lose any more than that if gold were to keep going lower. Now, on the flip side, I'm anticipating, or my prediction is gold's going to go higher. My upper boundary, 2111. All right, and that's in the contract. I know that that's the maximum I can make. If in one day or within one day, gold trades all the way up to 2111 and touches 2111, I will get knocked out of a trade for my maximum potential profit. So here I bought it 2072, and if it turns around and goes lower, I'm only risking 110. If it continues to go higher, I could potentially make $390. All right, that is a knockout. It is a Delta One product, and it's got built-in profit goal as well as a stop loss. That's what a knockout is. Very clean. And if either one of the boundaries gets touched, I'm knocked out of the trade. And if I wanted to reinitiate the trade, I'd have to get into it again, one way or the other. Now realize if gold were to go higher than 2111, I could never make more than that 390, because as soon as it touches 211 or 2111, I'll get knocked out and experience maximum potential profit. Okay. If there's any questions on it, it is knockouts are probably the easiest product that we've got. It is very clean. If you buy and it goes up, I could potentially make money. If it goes down, I would lose money, but I know beforehand exactly how much I could potentially lose and how much I could potentially gain. So I've got those levels built in. Now, that will beget the question, what happens if during the course of the next one day, it doesn't touch either one of these levels? It stays right between this channel. Possible. It could happen. Now, if that were to happen, uh, at the end of the day tomorrow, when gold settles at 1:30 p.m. Eastern tomorrow, it will have a settlement price, and my potential profit or loss will be the difference between where it settles and where I bought or sold. So since I bought at 2072, if it goes higher, I would experience some type of partial profit if it settles higher than 2072. And if it makes it up to 2111, I'm maximum profit 390. And if it settles somewhere in between this range, I'll have some partial profit. If it goes lower and settles below 2072, I'll have some partial loss down to 2061, at which point, if it touches 2061, I'm knocked out and I lost $110. And if you wanted to have more risk or reward, you can always trade more than just one. I'm just trading a one lot to show you how it works. And if you notice with gold, the knockouts, they're 50 points wide, 2061 to 2111, and each point is worth $1. That the maximum a gold knockout is worth is $500. So you'll notice when you add the maximum potential loss and maximum potential profit, it will always add up to $500. Okay, so there you have it. If I think it's going up, I buy. If I think it's going down, I sell. If it touches one of my boundaries, I'm going to get knocked out for either a profit or loss. And if it doesn't touch, I'll have a partial profit or partial loss when it settles on Friday at 1:30 p.m. Eastern. Very straightforward. Now before I go any further, and again, that's where you can always choose which knockout you want and which one's going to give you the risk reward relationship that fits what you're trying to accomplish. For instance, if I were thinking gold were going to turn around and the trend's going to reverse and I wanted to sell it, maybe I would choose this 2031, 2081. Here, if I sold at right here, 2071.20, okay? If I sold and I thought it was going to reverse, I know that if it made it up to 2081, I'm knocked out for my loss of 98. But if it were to come all the way back down, and listen, earlier this week it was right here. So could it turn around? It could. Now, before I jump to another product, I said I was going to show you a few things on our platform to do some analysis. Let's have a little fun. I'm going to go up here. We've got indicators and we've got drawing tools. If you're not familiar, these are technical indicators that you can use to populate your chart. If you don't know what these indicators are, we've got this nice little I information button where it will bring up some education to help you understand what this technical indicator does. So if I weren't familiar with Bollinger Bands, I would see that this uses moving averages, and the standard starts at 20, and it adds a standard deviation, and it tries to pick levels where you would potentially see support and resistance around the current price. So if I were to, for instance, populate Bollinger Bands, it actually gives me levels where I might see some resistance to the top or see support to the bottom, which might give you some ideas on when you would potentially want to buy and when you would potentially want to sell. Uh, the fact that it's on the chart and you can actually see where the, oops, didn't want to do that. Let's go back here. Okay. Oh, that's actually, I wanted to do this one. There we go. What I was just talking about. It does give you, if you wanted to have a different risk reward. I mean, I love how these indicators are on the chart, and then you've got your knockout levels, which can help you. But if I wanted to choose a slightly different one and look at my indicators, whichever indicators you wanted to populate it with, it helps you read the chart and also how you might want to choose a particular knockout that suits your trade. Okay. The other thing I wanted to show you are some drawing tools. You can put drawing tools. Let's go ahead and take the indicators off. I'm going to take Bollinger Bands off and just play with some indicators now. You can, if you wanted to put your own support and resistance lines in where you see fit, I can grab a horizontal line and I can drop a horizontal line. And for instance, if I thought that this were an important level where I see that at one point it had some resistance, a little bit of resistance, and then it acted as some support, it's an approximate level. You can drop your own support and resistance levels on there where you see fit. If you wanted to put some trend lines, all right, I'm going to draw just a trend line down here in the lower left-hand corner to the upper right-hand, and I just click. I mean, this has clearly been in an uptrend. You can draw your own trend lines. Some people, as opposed to using lines, let's go ahead and delete all these. They prefer to have some type of a channel indicator, which is a way to draw trends, but put some parameters around it. Here, I'm going to go ahead and click channel. And if I do this right, I'm going to see, here's kind of been, you can see how I drew that where it's always touching that at the bottom side. And then I can sort of open up my channel to where it's seen some resistance as it's gone up. And I get a nice little shaded area where I've got a trend that is going up, and that trend could continue. Again, no buy sell recommendation, but if that trend were to continue in this channel that you could see I sort of fit onto this particular graph, it might give you ideas on where you would potentially want to buy, where you think you might see some support, and where you might want to sell, where you would see some resistance. So we have these tools available for you to put on your chart. I'm going to do one more just because it's, people love support and resistance. A Fibonacci retracement. And again, if you're not familiar with Fibonacci, hover over the I. It gives support and resistance levels based on a ratio. It's a ratio that's seen in nature. People tend to look for that ratio in the markets. If I click on a Fibonacci retracement, here we've been in an uptrend. So the way I would want to do this is I would click in the bottom left-hand corner. You know what? Actually, I want to do that right in the middle. I'm going to click on the Fibonacci retracement. I'm going to click on the bottom left-hand corner of the trend, drag it through the trend to the upper right-hand side, and when I click, it's going to give me these percentage levels where you would, in theory, see some support or resistance. And what's rather interesting, if I could zoom in here, I'm going to try zooming in a little bit. I am zooming in. It's rather interesting is on my Fibonacci, you can see this level was a resistance level and then it became a support level. Uh, it came down through and it became a resistance briefly. And when it broke through, the next level was the resistance and this became the support. It traded in this channel for a little while before it broke through and went up to the next resistance, down here to support. It's rather interesting how that Fibonacci actually kind of does give you some support and resistance levels. And some of that could be because a lot of people are looking at that particular indicator. And sometimes, is it a self-fulfilling prophecy? I don't know, but it does certainly help. Again, not by sell recommendation, but I wanted to show you how we have some tools available, both technical indicators and drawing tools that you can put on your chart. Oops. And as soon as I click on that, it takes it away. You put on your chart, and on knockouts, it's kind of nice because not only do you see the knockout levels, but you can also see your drawing tools and indicator tools, and it could potentially help you in determining where you might want to buy and where you might want to sell. And again, with knockouts, all defined risk, all defined reward, and you know exactly where, if it were to go to the upper level where you would get knocked out, or the lower level where you would get knocked out. If it didn't touch a level, your profit or loss would be what's ever in between. And the last thing I want to mention before I move away from knockouts is just because there's an expiration with the product does not mean I need to wait until expiration or settlement to see what happens. In fact, most people, when they're trading knockouts, won't wait until expiration. They've got an opinion. So let's go down here to my positions tab, and I might be zoomed in a little too close here. Okay, let's go to my positions. If I go down here and this is my position, all right, this is where I bought one. So I'm going to go ahead and click on that. When I click on that, it's going to assume that I want to liquidate my position. So notice how it immediately put in a sell order. It's right here. Now, let's just say I bought it. I know I paid 20.72. Wait a minute. You know what? Yeah, I paid 20.72. So let's just put that in there. Okay, just so we remember, I couldn't lose more than $110, right? So I know I'm down here at 2061, I'd get knocked out. But let's say I don't want to wait. I don't know. I don't know if it's going to get all the way up to 2111, but if it got up to 2090, okay, if it were to get up to 2090, I would be willing to sell it, and I'll take $180 profit. Okay, so I'd get out early if that were to happen. I can place a sell order up at 2090. So if I actually just make it a sell and put in 2090, okay, now I'm going to sell up at 2090 if it were to get up there. Now this isn't exactly going to be right because this is assuming I'm selling it at 2090 when I'm actually really looking just to liquidate a long position, but I'm going to go ahead and place that order to sell up above, and you'll notice that I now have an order to sell up above at 2090. And I would take my profits if it were to get up there. So do I have to wait till expiration or settlement? No, I can get out early. Now, not only can I get out early here, I'm saying I'd like to get out early and take my profit. Let's say, for example, it were to turn around and start heading towards 2061 and I wanted to sell it earlier. All right, it gets to 2065 and I go, you know what? I'm wrong. This thing's going down lower. I could always sell it for a partial loss if my opinion changes. Now, the nice thing about knockouts, again, I know exactly, I can't lose more than $110. So to me, if I were going long here, I might just leave that. And if it went into 2061, okay, oops, I was wrong, I got knocked out. But if it were to go higher, if I walk away and it touched 2090, I'd get out, and maybe that's the level based on, I'm looking at this little channel and just, maybe it'll make it a little above 2090 if it keeps staying up here. But I'd be happy with my partial profit early to get out of the trade. So again, if there's any questions, please type those into Sophie. I hope that was clear. There we went through knockouts, and we even did a bit with some of the cool functionality in terms of indicators and drawing tools on our charts. Now I want to move away from knockouts. I'm going to bring up our markets page. And again, in knockouts, we do have knockouts for the commodities, for foreign exchange, and I believe we're actually looking at adding more foreign currency pairs here. And then also on the U.S. indices. So if you are more into the stock market and wanted to trade the S&P 500, which is the U.S. 500, or the Russell 2000, the small mid caps, all right, we've got knockouts for that as well. The NASDAQ, you want to trade NASDAQ, you're into tech stocks. Instead of picking one stock, you could trade the whole basket of the NASDAQ 100 or the Dow Jones Industrial Average. But let's just take a look at the NASDAQ. I mean, look what the NASDAQ's done. I'm going to go ahead and hide this, bring up a chart. Let's take a look at the last week. I like to use a 10-minute chart. That's just my own personal preference. And you could zoom, I'm scrolling in. I mean, you could see what the NASDAQ has done over the course of the last week. If you were into the tech stocks and you didn't want to have to go pick any one individual stock, or it can be expensive to trade stocks or even futures for that matter with margin and things of that nature here at Nadex, you can take an opinion. Now notice our NASDAQ knockouts are actually $600 wide. And again, you could choose which one you think fits your risk reward profile the best based on what you see what's going on in the market. Okay. So knockouts, Delta One products, they trade right around the price of the indicative price. If I think it's going higher, I buy. If I think it's going lower, I sell. And your market that you can trade, that you're looking at, you can always put an offer above or a bid below, or you can try to trade in between, but you'll have very liquid markets right around that current indicative price. Now, I am going to mention just briefly call spreads. Call spreads similar to knockouts. The difference with call spreads is that there's optionality involved, meaning if it touches those levels, you won't be knocked out of the trade. So let's take a look at the daily gold, and this is only going to be going for 26 more minutes, so it's a little more difficult, but because this is a daily contract, but you can see that there are ranges for a knockout. For a call spread as well. Actually, with 26 minutes to go, this is going to probably trade very close to the current indicative price. If there is more time to settlement or expiration, you're actually going to see a premium level in the price of what you can buy and sell. That's for that optionality component, because you wouldn't necessarily get knocked out if it were to go through one of the levels. All right, now I want to jump over to binary options. Now, binary options are our most popular product. People love to trade binary options, but they're priced a little differently than knockouts and call spreads. While a knockout is a Delta One product, binary options is it's either a yes or a no, and it's worth either 0 or 100. So I'm going to go ahead and click on it. Let's just take a look at here's gold. Let's take a look at the weekly as a day to go, and I'm going to pick one of these. And notice how there's a variety of different strike prices or levels that you can choose. I'm going to pick one of them just to populate the chart. Let's hide this. I am going to remove all of my drawings. Good, so that we make we have a nice, and let's take, that's fine. Let's zoom in here and let's take a look at what we're talking about with binary options. A binary option, and this is a yes or no. Will gold finish higher? Now, in this particular contract, I clicked on this 2071.5. Will it finish at 1:30 tomorrow? So it gives me a settlement time. Will it be higher than 2071.50? Yes or no? And what I'm really trading here, notice that these prices are very different. This is the probability that the answer to the question will be yes, that it'll be true, that the buyer of this contract will be correct. If you were to buy one of these, and let's pick a middle price, let's pick 55, because I think gold's going to continue going higher, and I think it's definitely going to stay above 2071.50. Now it could trade below, okay, and I still have my position on. All that's going to change is the probability of this being true at the end. These contracts are only worth $100. And when you buy here, notice my risk reward is calculated below. If I were to buy one at 55, I would be paying $55, so I'm risking 55. And if it does stay above and it settles at expiration above 2071.50, this contract will go to $100 and I will make $45. I will have risked 55, it goes to 100, so I would make 45 when it settles at 100. Now, if it settles below 2071.50 or at 2170.50 or lower, it will settle at 0. And so that is what is binary. It's either yes or no. It's 0 or 100. And the prices I'm trading are the probability that the answer will be true. Right now, if I thought in the next day gold were going to definitely get above 2081, remember I thought it's going to get up to 20. I thought it might get up to 2090. 2091. If you recall earlier, we were saying, hey, we would sell it at 2091. Maybe that's where we think it's going to get above. So here, let's take a look at the 2081 and a half. All right. Notice here that my probabilities are much lower. I could buy one of these maybe for 23. Right. Let's pick 23. Right between the bid-ask spread. In fact, I'm going to go ahead and place that order, and I'm going to place it. Okay. And notice that I actually here on my chart on the binaries, it tells me I'm trying to buy one here. But I'd pay 23. And what would I be doing? I would be only risking 23. If it does not, it has to rally up and get above 2081 and a half in the next day. Now, if it were to get above there and it settles above 2081.50, this contract would go to 100. So here I would be only risking $23 if I were to buy one to potentially have it go to 100. So my maximum profit there would be $77. So here I'm risking 23 to potentially make 77. I could potentially get a 300% return on my money by risking 23 and making 77 if it settles above here. And notice on the chart, this area in blue is where it would have to settle for me to for a buyer to make this a profitable trade. Now let's just say I do think it's going to rally higher, but I don't think it's going to settle above 2091 and a half. Okay, this is up above. What could I do? I could actually sell one of these up above. All right, now notice if I were to sell one, and let's make this 10. I'm going to pick a price in between the bid-ask spread. Okay. If I were to sell one of these or let's actually look at it. It's ticking up. So let's make it 12. Let's go right between. And let's go ahead and place that order. And I'm now trying to sell one up at 12. There's my offer to sell one at 12. Now, what am I doing here? I am now, if I sold one of these at 12 and it does not settle above 2091 and a half, if it stays below there and settles below there, and I actually sell one at 12, it will go to 0. All right, and I will have sold it for 12. I would profit $12. I can't make any more than $12, but I sell it for 12, and if it stays below 2091 and a half or settles at 2091 and a half or lower, I collect my $12. Now, if it settles higher than 2091 and a half, it would go to 100, and I would lose $88. All right, so notice how I can choose levels where I might be willing to risk if I wanted to buy, or levels where I'd be willing to sell. If I think the answer to this question is going to be yes, I would buy it. If I thought the answer were no and we're going to settle there, I would sell it. Right? And again, before you get into a trade, you know exactly what you could potentially make or potentially lose before you enter the trade. All right. And if you've got any questions on that, I hope you're typing them into to Sophie. Binary options, and we're all familiar with this kind of a concept. I hate to equate it to gambling, but people do bet $100 to potentially make $100 if are the are the Bears going to beat the Packers? Yes or no? That's a binary option. It's either yes or it's no. The same goes on with the markets. Is gold going to settle higher than this level? Yes or no? Now, here's the fun part about these is if you were to actually have, I don't have, let's go ahead and put a position on. Let's just go ahead and one of my orders. I was looking to, um, here, I wanted to buy one of these for 23. All right, so I'm clicking on it. Let's go ahead and just make this 30. I want to execute. Notice I'm bidding through the offer, and I'm going to amend the order. Okay, I bought one. All right, so now if you take a look at my positions page, I did buy one of these for 29 and a quarter. Okay, so now let's go back and look at what I did. All right, now look at that. As soon as I bought it, it went down a little bit. All right, this is the one that I bought. I bought a 2081 and a half, and you can actually see this is my position. Notice up here I've got an order. So I like how on binary options they show you your positions and your orders. Now, just because there's an expiration associated with these does not mean I need to wait till expiration. I bought one of these at 29. If gold were to rally to 2081 and a half, you would actually see this probability get up towards 50-50, and I could sell it right back out. So maybe I think I like gold in the first half, but I don't like them in the second half. So if it were to get up to 50 and I wanted to sell one, so I paid 29 for it and I wanted to maybe make $30 and just sell it if it got up to 50, I can place an order above the market to liquidate my position. And there we go. You actually will notice that not only do I have a long position, I'm trying to liquidate it as well. And I've got an order to sell it if it gets up to 50. And I don't know what's gold going to do. I still have a day. So just because there's an expiration associated with the product does not mean. Now, what I would like to do is it's not moving around a whole lot right now. Let's show you an example of binary options if you want price action and you want to have the excitement of what's going on in those markets. I'm going to go to a 5-minute binary option. And these are in our foreign exchange pairs. And I'm going to pick the Euro US dollar. Actually, you know what? I might, because, you know, if I pick one of these right now, you're going to notice, first of all, that this expires in the next 1 minute and 13 seconds. Let's actually bring up, I'm going to let this go because I think it'll be easier if when one resets. So let's look at a 1-day chart. Okay, I'm going to look at a 1-day chart, and I want to make this, because these are short term, I'm just going to go ahead and make this a 1-minute tick chart. And we can actually zoom in a little bit here. And let's give ourselves some space. Okay. All right, I'm going to come back to this second, because this particular one, notice how as time goes on, I just want you to see this, as there are 30 seconds left in this particular product, and these are going to go every 5 minutes. So you're going to see a lot of price action. Notice as we get into the last 20 seconds, the prices zero out. And that's because each one of these will be worth either 0 or 100 in the next 11 seconds. And no one wants to take the risk because it can move around very quickly. Okay, now, good. This expired. This one settled. And notice how we reset here in 5 minutes. So I'm going to go ahead and click on this again. Okay. let's bring up, oh, let's go back here. Okay, so let's go back to my 5-minute binaries. Let's go to Euro US dollar. I'm gonna pick one of these, okay? Hide this. Now, what I really wanna show you is how the probabilities of these move. This has got 4 minutes and 27 seconds to go. If I wanted to trade, and again, I mean, look how quickly, it's almost a little bit like a horse race. If I think the euro US dollar, what's going to happen in the next 4 minutes? Notice how the the price is currently, look at this, as the price, indicative price, moves closer to the contract price, the probability is going to get closer to 50-50. As it drops, notice how it's moving lower right now, it's going to move away from 50-50. The contract up here, lower probably, look at this, as it goes lower, look at that. That just went from uh, roughly 50 down to 25%. And this one, which was around 80%, is now, I mean, if I think this is going to keep going lower, I could sell, okay? Notice how the probabilities move pretty dramatically and pretty quickly as the price of the underlying moves, because there's only 3 minutes left till settlement. Notice this one down here, which was up near 100, is now only around 75% probability. And you'll see every one of these will either go to 0 or 100 in the next 3 minutes. That is true of all of our binary options as you get into the settlement. In the last few minutes, these can make pretty dramatic moves in price, which presents some opportunity. I mean, look at this. I mean, as we've dropped lower and lower, this 118.73, when we first started, was up near 80%, and now it's down at 20%. The market is only saying there's a 20% chance that this is going to rally back. I mean, here's the indicative price in the next 2 minutes and 23 seconds. This one down below, the 118.71, which was nearly 100 when we started 3 minutes ago, is now just a 50-50 proposition. And as we see the euro US dollar bounce back, you're watching this move higher than 50%. So I'm hoping by watching a 5-minute that you understood where, and it's nice on the chart, I see where it would have to settle for it to be a profitable trade. If I buy, it's blue. I need it to settle up here. If I sell, I mean, you can see, look at this. It's dropping straight through. There's only 1 minute and 40 seconds to go. And when we started this particular one, there weren't other options. So these all are probably going to settle at 0. And there's a 35% probability that even this one, the 118.71, will also settle at 0. Those are binary options and price action, maybe a little bit on steroids because it can move so dramatically, but I think it really emphasizes how the price of a binary option works and how you understand it's a yes or no, and what you're trading is the probability of the answer being true. So you're not, and that is really what you've got to consider versus a knockout. All right, and I'm going to move back. I'm just going to show you knockouts. Here, I'm trading probabilities, all probabilities. Is it going to be yes or no versus a knockout? And again, if you weren't clear on why it's called a knockout, it's a knockout because I get knocked out of the trade if it touches, if it touches one of my boundaries. Let's move this back to a 1-week chart, 10 minutes. All right. If it touches one of my boundaries, I get knocked out of the trade. And I am trading the actual price, the underlying, which is why I think it's a little bit more intuitive. When you knockouts is a great way to start to dabble in the market if you want to start trading, and you could do it in a very defined risk, defined reward way. Yes, you can always trade out of the contract early. You can either lock in profits or limit losses, but you know getting into the trade where your potential maximum profit and where your maximum potential loss would be before you even got into the trade, and it's calculated for you on the order ticket. And again, it's called a knockout because you get knocked out. Down below, I'm knocked out for a loss. Up above, I'm knocked out for a profit if I bought. If I were selling, it would be the exact other way around. Let's say I sold here. Uh, let's move this chart back up. If I happen to sell this 2031, 2081, if I were wrong and it touched 2081, I'm knocked out for my loss. I can't lose any more than $95. But if gold were to turn around and trade lower, and it made all the way down to 2031, I would get knocked out for my profit. And again, if it doesn't touch either one of these, you'll have a partial profit or loss when it settles in a day. I think I covered a lot on knockouts and binary options. I hope you were engaging with Sophie in the background. I did record this session. It will be available on our website. It will also be on our YouTube channel. I would highly encourage you to follow our channel on YouTube so you can see when we post new content. Also check upcoming webinars. You can always register for upcoming webinars. And I'm going to put a teaser out there. We're going to be doing another educational summit with our partners, DailyFX and IG, in about a month. So stay tuned and look out for that. It'll be a 3-day virtual event that we do for free, and you'll be able to get a bunch of additional educational content. Let me take a quick peek. I want to see if there were any questions that really stood out that, if I missed something. I think it looks like Sophie covered it all in the background, and I'm glad you guys were engaging with her. Again, if you've got any questions, please reach out to us. We have that chat functionality. You can email us, take a look at our contact information on nadex.com. And with that, thank you for joining us today, and I want to wish you all good luck in the markets.